If you want to trade high risk news events, then this is the strategy for you. It's called the liquidation break strategy, and it is a strategy that I pretty much designed myself just by trading over the years. We're going to go in depth on how you can deploy that strategy during a high risk news event, such as non-farm payroll, FOMC, CPI data, any of those. So we're going to do the example here with non-farm payrolls yesterday. Now this is an advanced strategy. If you don't know some of the terms that I'm going to use, I strongly suggest that you subscribe to the channel. Also, please like the video if this helps. You can go watch some of my older videos and get caught up to speed with some of these advanced terms that I will be using. We will also use the point of control, which is a volume profile indicator. If you want to know where it is, you just click indicators, go to technicals, pull up volume profile here, and you're wanting to use the session volume profile, the one that I have stored right there. All right, so basically all this indicator does is it shows you the high of day, the open, it shows you the entire daily range. Mainly what I use it for is where does most of the volume trade during that day. So you can see Thursday, Bitcoin traded off of daily resistance and down, and the point of control was down near the low of the day, or under, down around the low end of the box. So here is what data I had looking at before the non-farm payroll came out. What you would be looking for, also notice how the point of control on this daily range, the current daily range, your volume profile is at the high end of the day. So this could indicate, and usually does indicate, that you could potentially be looking for a short. Now for this strategy, the liquidation break strategy, you're looking for a push above the high of day, and you would be targeting the low of day. The reason we are short is because Bitcoin is trading down. The last 3 days have been bearish, and this is Friday with the non-farm payroll, so we know it's a huge news event, and typically they use big news events to liquidate both sides of the range and then push the market in the real direction. So anybody that's getting long here is going to be stopped out as soon as the newsprint occurs. So what you want to do is you wait until the newsprint happens, and then you're looking to sell or short the market right above the high of day or at the high of day. So you could put a limit sell there at the high of day, put your stop up a little bit, or if you want to wait for the spike and the flash wick, because the spread also widens up. So what I typically do is I just wait for the market to happen, and then I try to market sell right there, boom, right where the top tick is. I will show you the example that I actually took, the trade that I actually took, so that way you know that I'm not just speaking from hindsight here, but we'll do that near the end of the video. First, this is what we're going to do. So right now the candle's at 820. I want to give it 2 ticks or 2 clicks here. There you go, 830, 825. So 5 minutes before the news came out, you got that move. Look how you liquidated first the high of day, then the market went all the way down to the low of day and liquidated it as well. Typically when you make a fresh high of day and then instantly go visit the lows, that is a bearish signal. That is a very bearish signal. So now, even if you didn't take the trade for the liquidation break or get short at the high of day, you could take the trade anywhere now. You could take it just now and throw your stop above the high of day. Let's see what happens if you do that before the news. There's a really good chance that you may be stopped out. So I suggest trying to get that entry at or above the high of day. One more click. Here is the news. Boom. There you go. You can see on this exchange, you didn't make a fresh daily high, but you did end up getting another push to the downside. So if I show you my entry here, all right, so here is the entry. You can see that the sell was right around the high of day. There was the high of day. So when I actually sold it by market, I didn't get as high as a fill as I wanted, but you did get a liquidation on the high of day there. Down here was my target. So with that spread on the entry versus the stop, you can see that this was like a 6-to-1, 5-to-1 risk to reward, and it did end up playing out. There's that. That shows you that this wasn't a hindsight trade. I actually took the trade in real time. There it is. Liquidation break strategy. I also nailed the CPI trade with the same exact strategy. There's plenty of different times and events that you can employ the strategy, but mostly it's for those high risk news events. The liquidation break strategy, traded successfully during high risk news events. So next time one of those guys say some bullshit like intraday traders cannot successfully trade the news, you just refer them to my channel, to this video, so that way they can now have a strategy for themselves to deploy during high risk news event. Thank you all so much for your time. Make sure you trade safe, make sure you trade smart, and as always, happy trading, everybody.